Hello and welcome back to another episode of Real Estate Renovators. Real Estate Renovators is the business advisory show for real estate professionals. My name's Chanell, and by now you should know that this is Rex. How are you, Rex?
I am very well, Chanell. Yourself?
I'm good. I mean, second day of winter, or by the time this episode gets filmed or aired, we'll probably be halfway through winter. We've got a little bit of sunshine coming through, so
It's nice. It's been a good winter so far. It hasn't been too cold.
What winter have you been living in?
It's sunny.
It's awful. It feels like we didn't even have a summer, and it's been winter for like 4 months, and it's just started.
For me, this feels like summer. It's nice and warm.
Yeah, okay. Well,
Let's go to the show.
Let's go straight to it, I think.
Today we've got some advice for all our viewers. So it's a business advisory show for real estate professionals. So real estate professionals know a lot about their rent rolls. They know they can borrow against their rent rolls. They know they can buy a rent roll and finance it. But what I've seen a lot happen is they don't know there's options available for funding of rent rolls. Most clients we have think Macquarie is the be-all and end-all with respect to finance, and most don't realise that there is specific brokers out there that can help them source a better finance opportunity for their business. So today we've got Anthony Franklin. Anthony, welcome to the show.
Thank you so much. Thank you for having me.
Oh, pleasure. Tell us about yourself, Anthony.
So I've been in corporate banking for about 15 years, Rex. So I've been looking after professional service firms, corporate property, real estate agents, accountants, lawyers. So there's a lot of options in the marketplace that, with a bit of experience, there's a lot of tips and tricks that you can give real estate agents to help them with their finance needs.
Fabulous. So in my opening, I mentioned that a lot of my clients go to Macquarie, and I believe you were at Macquarie for many years yourself, but they don't quite understand there's other financiers out there that have an appetite to lend to real estate agencies and rent and secure against the rent roll. Do you want to tell us what options are available?
Yeah, of course. So as we all know, Macquarie is a very dominant player in this space, especially for the real estate agent division. So Macquarie does have a very good product offering, but there's other offers out there, as you've explained. So, we can look at ANZ, NAB, Westpac, and even Judo Bank. So these lenders have slightly different policies, slightly different appetites, and it's best to ask the market the question when going for finance around what LVR you can get and also what interest rate. So there's a big impact on asking those questions and not just defaulting to the brand that you're familiar with.
And how does that work? When you want to refinance to a better deal or a structure, how does that normally plan out?
So there's a couple of options that you can really look at. One is you can go direct to the bank or speak to your banker if you want to. Not something that I advise personally.
Yeah.
The best advice that I can give is probably go to a broker, someone that's got experience in the marketplace and has connections at multiple banks as well. So it has that option to just have a conversation. There's no commitment when you have those conversations. There's no cost involved. It's just a little bit of your time.
But not all brokers can do this. It's a very specific broker. So it's important people to realise that if you go to your normal broker that does your house or your clients' houses, they're not going to necessarily know about these offerings. So they should find a right broker for this.
Yeah, so there's a different skill set involved. So a lot of brokers out there are residential real estate brokers, so home loan brokers, investment property brokers, but you need to find one that can help you from a commercial perspective, understands the value of the business, understands cash flow, and can have those sort of more formal conversations with the commercial lenders in the marketplace.
And when it comes to lending against a rent roll or a real estate agency, what is the LVR, the loan to value ratios that the different banks look at?
Yeah, good question, Rex. It does differ in the marketplace around the appetite from the different lenders. So when dealing with sort of the 4 or 5 major lenders that play in this space, the market is pretty standardised. So 50 to 70% is pretty normal against the value of the rent roll, but it depends on the lender that you go to and also what your rent roll does actually look like. So there's some specifics of the rent roll, such as where the rent roll is, what properties make up within the rent roll, is there any concentration to a landlord within that rent roll, is it holiday, apartments, housing, that sort of thing. So we need to understand the diversification of what's made up in that rent roll, and once we've got that, then we can approach the relevant lenders. So
is that based on a valuation, or is it you get a valuation done on it, or is it a formula that you guys use, the lenders will use themselves?
Again, it's really lender specific. So when we come back to that LVR piece, 50 to 70% of a valuation. Some of the lenders will do a formal valuation external to the bank. So that will cost anywhere from 3 to 5 to even 7,000, depending on the size of that rent roll. Some of the lenders in the marketplace, specifically I'll name 2, Macquarie and Judo Bank, they have policy where they actually understand the space well enough. They understand the multiples of what these rent rolls are trading for in the marketplace. And because they have that knowledge and that expertise of history of playing in that space, they actually don't need an external valuation. And they can do it based on their own credit policy. So it can save you a few $1,000s, but don't let that deter you from exploring other options. So when you are exploring other options, banks will come to play because they want your business, right? So they might potentially pay for a valuation or discount an application fee to help cover some of those costs.
Fabulous.
What about controlled monies? Is there some options for controlled monies?
There is some options. So everyone would be familiar with the DEFT process. So that is a Macquarie Bank product. It's very well established in the marketplace. All those renters, they get that DEFT card, that unique code that makes payment and reconciliation of accounts really simple for the agency. The major banks do offer controlled monies accounts. So they often set that up with what's called a master account authority. So it makes opening accounts for your properties a smooth process with the banker that you can work with. And they have options for those reconciliation around BPay. So BPay also has individual unique code numbers and makes that reconciliation work well. The issue that you've got with controlled monies in your bank is that a lot of the lenders in the marketplace will want you to have your controlled monies account where you borrow your funds. So they're often quite linked because they form part of the security of that rent roll and what's actually occurring, what the bank wants to see is that cash flow.
All of them or just some of them?
Just some of them. So again, Judo Bank is a key example that won't actually require those controlled monies to sit with their firm. They'll just want some reporting around what it looks like.
What about, how would I go about setting my business up for lending?
Yeah, so there's a lot of things that you can prepare your business for setting it up for lending. One I really advise is getting good professionals around your business. So really strong law firm, a really strong accountant and a really good broker or a banker that can help you understand the cash flows and what documentation is required for lending. So examples that banks and lenders are going to look for, a couple of years worth of financials, profit and loss and balance sheet, ATO portal, so that's going to be ITA and ICA, so the integrated tax account and client account, depending on the structure of your business. Personal statement of position, so that assets and liabilities, and also personal tax returns of the sponsors/directors of that.
All the fun things, right?
All the fun things.
God, don't you love when it gets to end of financial year and you have to submit all your documents to the ATO? Oh God, it just gets me going. It really gets me going. It's still my least favourite thing in the world.
It's not the most exciting thing to prepare, but documentation is key to having a successful transaction and setting it up. So reviewing that information with the broker and the accountant prior to going to the lender is really important, because you can prepare those accounts to make sure that there'll be a successful application. So we want to make sure we're reviewing that documentation, having those conversations, and then getting ready for that conversation.
And can you give us a reason or a scenario where a business might be rejected for a loan?
Yeah, there's a few scenarios. Hopefully we haven't experienced them and hopefully we don't have to experience them. But when going for a loan, there's a few key points that we want to make sure that we're ticking the boxes on is probably the best way to explain it. One is a clear ATO portal. The banks don't like having ATO arrears in your company because the security that the ATO has can step in front of the lender. So they're always nervous in that perspective, and it's also a key, it's a key point around cash flow strain. So the banks really look at that ATO portal. A second can be account conduct. So we often don't think overdrawing that account slightly, or if we're buying something and it'll be topped up later in the day. It actually has a really pertinent point around behaviour and character question that the banks look for when lending. So making sure those accounts are in credit is really important. The third one is a clean personal credit score. So making sure that we're not taking 15 different credit cards, not playing the points game, and having appropriate inquiries with the lenders. So those three things, if we've got, we want to avoid ATO arrears, a lot of finance applications, and clean credit is probably the easiest ones to look out for.
That sounds ideal. But what if we've got a client that hasn't got that? The harder clients, the ones that not quite up to date with their tax returns, have a small amount of ATO debt on their portal and may have a few credit cards.
Not real estate clients, surely
Definitely
not.
not
They're
real
always
estate
above
clients.
board.
We all want the perfect client. The bank
Fancy
always
cars
wants
on
the
the front.
perfect client. The major banks, they'll be harder to deal with in that space. So, they're looking for the cleaner quality credit. So they want things that are quite clean. But if you've got a few hairs on the transaction, as you've mentioned, an ATO arrear, there might be a hangover issue in the business from COVID. There could be something as small as you've lost a key staff member as an example, and there's a cash flow strain on the business for a period of time. So there are a couple of lenders. I prefer not to name them at the moment, but definitely have the conversation with your broker. And there's a few lenders in the marketplace that will still lend funds in those scenarios.
So more sort of like your non-bank lenders, right? That can take on higher risk.
Yeah. So there's a few second tiers. There is a few first tiers that will entertain the conversation, but we just need to understand what's occurred in the business and why there might be an ATO arrears for a period of time.
And with those discussions, if you have a broker, you do those discussions with the bank on behalf of the client. So
absolutely. So that's the key point to having someone like myself involved in the relationship, is I can workshop the transaction with 4, 5, 6 different lenders quite quickly over a period of days, not have to waste your time. So you can focus your time on actually selling more property, trying to win more properties for your rent roll, and not have to have those complex finance conversations as needed. And doing that, it actually doesn't affect your credit score. There's no marks on any files, and you can have those off-record conversations with the lenders to gain where the appetite's going to actually be.
after you, sorry.
Both draw a breath at the same time. So Anthony, say right now I'm a medium-sized real estate office. I'm a little bit behind on my, my tax files, but I'm looking to potentially expand and buy a rent roll. What could I do right now to set my business up for success?
Yeah, so cash flow is the key importance, right? So we want to make sure that there's enough working capital in the business. We might look to structure the business so that we clear up any hairs on the transaction, as we say, make sure that it's the financials look fairly in order, and then start to have those conversations. So lenders like Judo Bank out there will entertain clearing of potential arrears of certain different loan accounts, as long as the transaction makes sense. So we want to make sure that the value is okay around that 60 to 70. If we need to stretch for a period of time, we also can do that. So some lenders will go outside their parameters, go up to that 70. There's a lender that I've seen actually go to 82% on the value of a rent roll as well for a short period of time. So when we go outside those parameters, because all businesses have cash flow restraints for periods of time, we just need to understand what the cash flow can do. Will it pay it back over a short period of time? Does it need to be stretched over a longer period of time? So lenders have different product requirements. Some can do 10 years, some can do 15, some will do interest only, depends on what you're trying to do.
And is that more difficult now? Because looking at a vast majority of real estate offices, there's cash flow issues. Obviously sales are down. Are you seeing that right now in the market? It's harder to get a loan because of what's happening in the industry right now?
From getting a loan in the marketplace, it's not harder, it's just trickier on the servicing requirement. So because we've had 11 interest rate rises in a row, which we've all thoroughly enjoyed.
Oh, what a time to be alive.
There might be 12 coming up. Speculation's still out. But because we've had so many interest rate rises, that the cash flow requirement to service a loan is a lot higher than it used to be. So the banks often have the actual interest rate plus a buffer on that loan, and servicing that has become a bit harder. So that's where people say getting money is tougher. It's because that servicing requirement is a little bit trickier to get through.
Speaking of interest rates, what should a real estate agency be paying in terms of interest? Yeah. What's a good, healthy range?
Good question. So two lenders that a lot of real estate agents deal with are often in the high 6s to low 7s as a market range when you're looking at balance sheet lending against rent rolls. There are a few of the major banks that are really starting to play in this space at the moment. So I've seen banks like Westpac and ANZ and NAB as an example, really starting to play for strong firms into the low 6s at the moment. So clients that I've worked with over the last couple of months, as an example, we've done reviews. We've managed to save 30 to 50 points on their existing facilities with their banks, and they haven't had to refinance or do anything. One client that really wanted to look at their options in the marketplace managed to save just over 1% going through a refinance process.
Wow.
And that bank...
He's a client of both of ours as well, so who he is after.
Yeah,
there you
so
go.
that bank has a bit of a unique product. So they'll lend against the rent roll, but they'll also take the GSA over the practice, or the agency, I should say, and give a value to the comms of the sales within that business as well. So the multiple of EBITDA in that business plus the value of the rent roll enables a further lending scenario.
Did you say EBITDA? EBITDA.
Yeah. So
I've learned that. Sorry, Rex and I do one-on-one training on many accounting words, and that's one that really stuck out to me because I have been, my Sunday school sessions with Rex have really paid off. So I've caught that lingo. Interesting. And what do you predict is going to happen in the next 12 months in terms of lending?
The appetite's not going away. So
Okay.
the banks are really starting to fight for their clients. Their retention is really strong in that marketplace, so they want to hold on to their clients because the cost of winning a new client is more expensive than the cost of keeping an existing client. So banks are happy to come to the party, reduce those interest rates, strengthen the relationship, and really work with you as you're going through that growth phase.
And I think what I've seen a lot of agencies don't do when I speak to them, they've got cash flow issues, but they don't look at refinancing. They normally they speak to the banks and get finance applications and finance for acquisitions, but they grow their rent rolls and don't often look at refinancing it to help with the cash flow shortfalls.
Yeah, there's a few tricks. As you said, a lot of people use their rent roll for acquisition and they use it to buy another one or sell, buy a different asset. So extracting the value from your firm is really important around this scenario. So rent rolls have a value. The banks are happy to put a working cap facility against the value of that rent roll. So if it's not fully leveraged, you might be at a 50% loan to value ratio as an example. You can take it up to 60%, but put an overdraft against your business to handle, pressures in times where the wages do get a bit tighter or the sales have been down for the month. So understanding that there's value in your business to unlock it for things like working capital or even releasing money from the business to buy property as an example. So you can release equity from the rent roll or the business to put a deposit on a commercial asset if you were renting and wanted to buy your own premises.
What's a tip you want to go away with to real estate agents?
The biggest tip is ask the question, involve someone that knows the industry, involve someone that's worked with the banks for a long time. The more information you have, the more knowledge that you can gain, the more power you've got to make decisions in your business.
Don't upset the ATO.
Submit
your tax returns.
Submit your tax returns and keep up with the BAS.
Yeah.
Awesome. Thank you so much, Anthony, for coming on.
You're welcome.
I learned a bit. I'm sure you learned probably a bit more. And
Absolutely
hopefully
did.
our viewers take a bit from this as well.
Thanks for your time.
Thank you. We'll see you on the next episode of Real Estate Renovators.